Okay, hello, I'm Eric Fry, here with Dr. Marc Faber, the editor of the Gloom, Boom, and Doom report. Which is it?
Well, I mean, the world is in transition, and you have some trends that are favorable and other trends that are not favorable. So I think it's not a question to be ultra bearish or ultra bullish, but to try to identify where there are opportunities. And I believe, in general, we live through very interesting times in the sense that the weight of the global economy is shifting to emerging economies, and we'll have volatility in emerging economies. But in general, I think that as a percent of world's GDP, you will find in 10, 20 years' time, countries like India, China, Vietnam, Latin America, Africa, the Middle East, Russia, Central Asia, will have a much larger weight and also a much larger say in global economic affairs and political affairs. And that will lead to a lot of tensions and a lot of volatilities in asset markets.
Right. Well, that's the boom part of the story. The gloom and the doom part, you've written a lot about deflation and inflation. Often those are simply academic arguments. In this environment, it feels as though the inflation-deflation argument is critical and a kind of a razor's edge for determining the outcome of various asset classes.
Yes, that is correct. But if you really think through the deflation scenario, then it would mean that the economy in the Western world, notably in the US, is very weak. So what happens if the economy is very weak under the Obama administration? The fiscal deficit goes up, not down. The government debt as a percent of the economy expands. Monetary policies will have another huge easing move, another extraordinary measure, an increase in the Fed's balance sheet. These are all factors that then lead eventually to more inflation, even if you have an environment where GDP per capita in real terms, inflation adjusted, goes down. The government will, of course, lie about it. They'll make it look good with all statistical adjustments they can use, where it will go down as it has for the last 10 years, but asset markets can go up very strongly.
Well, you've made the case that that the government monetary policies will offset the deflationary effects in the Western economies. How quickly, and do you think that will take place?
Yes, and also I'd like to point out that in an economic system, you can always have in some sectors of the economy deflation and in the other sectors inflation. And we have now a global economy. I can assure you, you can go anywhere in the world, whether it's Brazil or Africa or Asia or Central Asia or Russia. The price level today is, of course, much higher than 20 years ago or 10 years ago. So the US and Western Europe, they may have, on an international scale, a bias towards maybe a deflating a little bit. Certainly, real wages are deflating. But in emerging economies, you have a lot of inflation. In some countries, you have like food prices going up annually at 20% per annum. And nobody can tell me that his energy bill is today lower than it was 10 years ago, because the price of oil is much higher. It's up from $10 a barrel to, say, $80 a barrel.
Right, but right here in the U.S., many economists, and you know who they are, make the case for a long-term deflation or disinflation because private credit is contracting.
Yes, I love one economist. He lives in New Jersey. His train fare have just gone up by almost 30%, and he talks about deflation. I can also send him a nice message that his tax bill will go up. So taxation is also a form of inflation, because it's not as simple as to say, I'm going to tax you and you will pay the tax. You can roll over these taxes onto other people, like retailers. They can roll it over to the consumer, and so forth and so on. This is the difficulty of fiscal policies. You don't know right away who will end up paying the tax whenever you impose a tax.
Okay.
Thanks for watching this installment of the DR video series. We'll be back with another exclusive video soon. In the meantime, stay tuned to the Daily Reckoning for updates. Daily Reckoning subscribers get first crack at these videos, just one of the many perks members of this free daily e-letter enjoy. Sign up now by visiting www.dailyreckoning.com.